Welcome to our video series covering core concepts that are important to borrowers' loan protection from PCBB. In this session, we'll focus on understanding swap rates, a fundamental element of every BLP deal and an important part of pricing these loans. We'll explain what a swap is, how a swap rate is calculated, and how your institution can use the swap rate to establish the fixed rate portion of a BLP loan for your borrower. Let's dive into swaps. By definition, a swap is a contract between two parties who agree to exchange monthly interest payments. The payments are based on a specific benchmark index and a specific loan amount. The swap rate, which is calculated by averaging the projected periodic rates of a specific index, is a preliminary stage for BLP. The swap rate will be used to set the fixed rate for your borrower. Here's how it works. First, PCBB passes a swap rate onto your bank. This swap rate is fixed and inclusive of execution costs. Your bank then adds its credit spread to this swap rate and calculates your borrower's fixed rate for the BLP loan. We'll discuss this step in more detail later. For now, let's discuss how PCBB determines the agreed-upon swap rate. First, a benchmark index is chosen from several options to use for the life of the swap. SOFR and the federal funds rate are the most common indices used for swaps. Prime is not an active market for a swap and therefore is not cost-effective for your borrower. The swap rate is calculated by averaging the projected periodic rates of the index. The periodic rate used can be monthly, quarterly, or yearly for the chosen index. Let's look at an example using the 1-month federal funds rate as our index and a loan with a 10-year term. In this example, the dashed line shows how the federal funds rate is projected to change over the next 10 years. Averaging the rates represented by that dashed line and adding PCBB's execution cost, you get a swap rate of 2.3%. It's important to remember that the swap rate is based on the term of the loan and the index chosen. If you have a loan with a different term or you use a different index, the swap rate will most likely be different as well. Let's look at another example, using the same 1-month federal funds rate projections, but with the 15-year loan. You can see how the average of the rates represented by the new dashed line has changed. For this 15-year loan, the swap rate now becomes 2.4%. It's also worth noting that the index rates change on a daily basis. Because of that, any projected average will also change daily. That's why the swap rate is not set until the day the swap agreement is executed. Find up-to-date swap rates in the BLP portal. Now that you understand what a swap is and how the swap rate is calculated for BLP, we can discuss how you can use the swap rate to price your borrower's fixed rate. This fixed rate pricing calculation has two components. The first component is the swap rate. The second component is your institution's credit spread. The credit spread is exclusively determined by your institution based on competition, index used, and other factors that you identify. For example, if the swap rate for a 10-year loan using 1-month federal funds rate is 2.3% and your desired credit spread is 2.5%, then your borrower's fixed rate is 2.3 plus 2.5 or 4.8%. It's that simple to use the swap rate to determine the fixed rate for your borrower. So far, we've discussed a standard swap arrangement, but you can also build in some interesting options. For instance, a monetization or hedge fee option allows your institution to earn additional fee income through BLP. Contact our team if you're interested in this option. We also offer forward rate locks for situations when your borrower wants to lock in the rate now for a future loan. For example, in the case of permanent financing of a construction loan. For more details, see our video on forward swap rate locks in this BLP portal. This concludes our review of swaps, a BLP core concept. In this session, you learned that a swap is an agreement between two parties to exchange interest rate payments. You saw how a swap rate is determined based on the average projected periodic rates of a specific index. And you learned how to use the swap rate plus your credit spread to price your borrower's BLP fixed rate. To learn more about BLP, Look for additional videos as well as helpful checklists and sample BLP documents right here in the BLP portal. If you have questions, please let us know. We're here to help, and our goal is the same as yours: a satisfied customer.